In this video, we're going to catch up with the price of gold and find out just why it's been such a strong performer in recent months. Hello, I'm David Jones from Capital.com, and I thought this would be a good opportunity to take a look at the price of gold in more depth. We last looked at it in mid-December, and I was saying back then it could be one of the more interesting markets to watch in 2019. Since then, in just the last 6 weeks, we've seen the price rise by around about $90. So we're seeing a continued recovery for the price of gold. And it started this year really strong as well. So first of all, let's just take a look at why the price of gold has performed so well in recent months. Let's take a look at some of the numbers for gold. So over the last 12 months, this is all to the end of January 2019. The performance is not that impressive. The price of gold slipped by 1.5%. But if you look at what stock markets did over the last 12 months, clearly they had been under some pressure. But we had seen a falling gold price compared to where it was in January 2018. But things really have turned around since the summer of 2018. So in the last 6 months, the price of gold is up 8%. And just in the last month, so since the end of December 2018, the price has risen by 3%. So we're seeing continued ongoing strength in the gold price. So what are the reasons for this? The easy answer is a weaker US dollar. So the price of gold moves opposite usually to the way the US dollar is going. So a strong US dollar, and we saw that from April of 2018, puts pressure on the gold price. In recent months, the US dollar has been weaker, so that has lifted the price of gold. But it's not just US dollar driven. We've also had stock market uncertainty, for example. The last 3 months of 2018, we saw plenty of volatility for stock markets. Traditionally, in times of trouble, gold is seen as something of a safe haven for investors' cash. Then on top of that, we've got wider economic worries. Coming into 2019, there's concerns about the global economy slowing down. There's still the threat of trade wars between, for example, the US and China. So all of this uncertainty, it has been, I think, something of the perfect storm almost, coupled with the weaker US dollar. And that's why we've seen the gold price lifted so sharply. And then finally, probably not as important, I don't think, as the first two reasons, but rising inflation. So if we saw inflation maybe creep up in the year ahead, again, traditionally, gold is seen as something that's a hedge against inflation. So something to park your cash. If inflation increases, we'd expect the price of gold to go up. So all three of these factors, to one extent or another, have really driven the price of gold higher over the last 6 months and made for such a positive start to 2019. So we have had what we could say is almost a perfect storm for the gold price, and that's why we've seen it lifted about $160 higher than the lows we saw back in August. But where next? What are the big levels to watch out for if it starts to sell off? And what's a possible medium-term target for the rest of this year? Let's take a look at the charts. Let's take a look at the last 12 months or so for the gold price. So this is the beginning of 2018. It was starting strong, but was pretty much sideways all the way through till April. And then we saw that strength for the US dollar come back after having a really poor performance in 2017. We saw US dollar strength return from about April of 2018, and this clearly put pressure on the price. So gold was trading just above $1,360 an ounce, but by August of 2018 had slid as low as $1,160, and we can see the trend here is down. So the price of gold suffered, a sizable sell-off, a $200 move in about four and a half months for the gold price. But then things started to change. So from October 2018, we saw the price start to recover. After this period of going sideways for a couple of months, it broke above the trend line and started trading higher up through 12.25. Let's take a look at what happened next. And here's the recovery off those August lows to where we are at the end of January. So from going from hitting 1160 in August 2018, we're trading at 1322. So pretty much the highest levels since May of 2018. That recovery is still very much intact. I mean, it has got overextended clearly over the last 6 weeks or so, but momentum is still on the side of the gold price. Even if we had a sell-off from here, there's lots of support running from the 1200 area, the mid-November lows, through to 1240, and where the trend line comes in at 1230. So gold, at the moment at least, could stand a significant sell-off from where it is, and that recovery would still very much be intact. So if we're looking at longer term targets, I think the obvious one is for a run back up to these old highs, just shy of $1,370 from the beginning of 2018. So assuming this trend's going to continue, we're not going to get there in a straight line, but for now, at least, people looking at this trend would view a sell-off back to the mid-1200s as a buying opportunity. And I think it's only if we lose to the 1225 area does it start to look as if the recovery in gold is over. But I think 2019 is going to be an interesting year for this market, given the size of the recovery we've seen over the last 6 months and the uncertainty that we have in stock markets and the wider global economy. So in the short term, you could say it is certainly overextended, but for now at least, it does still have plenty of momentum behind that move. Even if it starts to sell off from here, $50, $60, there's still plenty of support, and that recovery from those August lows remains very much intact. So I think it is going to be still one of the markets to watch in 2019, particularly when you consider the ongoing political and economic uncertainty that we still have around the world. We'll start wrapping things up there. As usual, if you have any questions or a different view, leave us a message in the comments down below. I do read all of them. To never miss out on the content we produce, we look at different markets, we do live broadcasts, we're just starting doing a how to trade Forex course. So to never miss out on any of this, just make sure you're subscribed by clicking the subscribe button down there, and the alarm bell notification thing. If you click on that, you get a push message whenever we upload new content. To find out more about the company and open an account, we do from time to time offer zero spread markets. We've just done one in the last week for gold, so you can trade it without a bid offer spread, so it reduces your cost of trade. But you need an account to do that. So to open an account, either download our app for Android or the iPhone, or go to our website Capital.com, and you can get up and running with a real account or a demo account and have access to our trading platform. But we'll wrap things up there. So from me, David Jones, and Capital.com, good luck with your trading.